Hello everyone, my name is Bhavesh. Those who don't know, I'm a buyer's advocate and I run this company called Jasper Advocacy. We buy investment grade properties for our clients, then leverage our core competency of Airbnb, hosting on Airbnb and booking.com for higher cash flow. So we buy residential properties and run them like a hospitality business. I've been trying to be a bit more consistent around such sort of content where we dig deeper into the numbers, the strategy, and the vision behind any sort of deals that we do. And let me walk you through the recent purchase that we have made. This is our company website, Jasper Advocacy, capital growth plus cash flow, best of both worlds. This is pretty much our business in a nutshell. We bought this property in Lauderdale in Hobart in Tasmania. It's more like a renovation and development play. It's beautiful property, 100 meters from the beach. And we bought this property for $735,000. We bought it under market. The desktop valuation when we bought it was sitting at $831,000. So now the strategy is we're going to add some love to the property, renovate it, all cosmetic, nothing structural, carpet, painting, new appliances, and good furniture to position the asset and attract that sort of a audience that we want into our Airbnb property. Now we're going to spend $55,000 on renovation and furnishing and then go live on Airbnb. So that's the strategy. Why we bought in Lauderdale? Let me quickly run you through the stats of the suburb Lauderdale. This suburb grew 156% in last 10 years. And the median price in the suburb is $950,000. And as we go back, we bought this property for $735,000. So we bought it under market. There was instant equity created. Sits on a good 668 square meter land block. The plan is to go live on Airbnb and add a granny flat. In the meantime, apply for plans and permits to the council. Where we've got the confidence around buying this property and running it on Airbnb, we use the software called ADNA. It's more like core logic and RP data of short-term rental listings. This property is projected to make $72,000 on Airbnb at a 59% occupancy and an average daily rate of $332. This number, $72,000, where did this come from? This number came from these Airbnb listings. They are live on the market. There are best case scenarios, there are worst case scenario, and this number 72,000 is an average case scenario. There are properties which made $91,000. This is how it looks like, and there are properties which had made $37,000. So on an average, this property is projected to make $72,000 based on live comparables in the market. Now, let me show you the beauty of this asset. So this is the Google Maps satellite version of this property. As I said, it's 100 meters from the beach. And this property sits on a rectangle shaped land block. We're going to add a 60 square meter self-contained granny flat here. We have already applied for plans and permits, and as soon as we get it, we're going to construct it. What it's going to do, it's going to manufacture equity and increase the overall valuation of the asset and increase its appeal from an Airbnb lens. Now, once the granny flat is done, so we will have two different assets, three different demand pools from the same asset, which is this existing property which can occupy up to 6 guests, the rear granny flat which can occupy up to 3 guests. So we're going to list it very much strategically. There would be 3 different listings on Airbnb. One, the main dwelling which can occupy up to 6 guests, the second dwelling which can occupy up to 3 guests, and third, and the overall entire property which can occupy up to 9 guests. So this is a strategy. Cash flow through Airbnb, same asset, 3 different demand pools, and happy days. So we're really proud of this one. And if you want such sort of asset in your portfolio, reach out. Let's organize a chat. Happy to help. Until then, see you.